Stock Market Morning Prep video for Monday, July 28th. Markets red across the board. Dow Jones down 123, Nasdaq down 22 and a half, the S&P down almost 10, and Russell down 11 and a half points. So we had red across the board. Markets look like things are starting to brew here and starting to shake up a little bit. But can we call this a market top right now? And I just don't think so. There are plenty of signs that say that the market has rolled over, but we need price and we need some volume to confirm that we do indeed have some sort of a market top, at least a local top in place, that we get some sort of a correction. I don't think we're there yet. But earnings have not been great, and that's one of the reasons for the softness in the marketplace. We do have the geopolitical tension still upon us, but hasn't really sparked any type of really big move to the downside. Actually, if anything, crude oil sold off again Thursday and Friday, and down big today, actually. Now 55 cents in the pre-market. That's a lot for a pre-market price action. And that was we had a build in inventories. Last week we had a draw. So the inventory numbers are so volatile, it's just ridiculous. But nonetheless, crude oil is weakening a little bit. We had some of the energy names are starting to roll over as well, and they had a big run. Basically from February. So let's see what happens. I like the energy space. I do like it for a lot of that geopolitical tension. I do think the war premium still is not fully there yet, if you will. But we do need to see prices really tells us which way the stock, the sector, or the index is going. So you have to listen to what price tells us, not what we like, right? So at the moment, I'm still following the energy names for day trades, but they seem to be a little softer the last couple of days than I'd like. So we're still going to pay attention to them. Home builders are still moving lower because of lumber prices. We mentioned that as well. So we're going to keep an eye on that. And really, just general across the board, a lot of sectors and stocks are weak. They just look very, very weak. And the markets, and let me rephrase that. The indexes that we follow are just not really going anywhere. I mean, now you had Nasdaq down 22 and Russell down 11. Russell already basically made its big move lower, and now, and I'll show that to you in the charts. But it's just they move lower, they open, they gap down, they sell off for the first 10 minutes, and then they just kind of stagnate all day. Whereas if you have if the markets run up, they do pretty much the same. But at the end of the day, you'll have that short covering where they kind of push indexes higher. So you get a little more movement to the upside and virtually no movement to the downside. And but I think it's going to change, and we need to just pay attention to our indicators and what's trading around us. And I mean by certain indexes, correlated assets, what's trading in Europe and Asia in the overnight session. I mean, that's important. What key sectors are moving? When they should be moving higher, but they're not, so to speak. A lot of market divergence. Pay attention to that because that's going to give us a cue that I think the markets are done for the upside. So, yes, is it a market top? Too early to say. And I do think that the markets are made to fool the masses. So if we do get one more push, I think it'll be to the upside, and then I think that would be it. Okay. And it's a shame because now we're at 1970 in the ES. I would have liked to see hit us tag 2000 and then roll over. That's really the most important thing. And yes, I think the markets are totally due for a correction. It's just not healthy to have the markets just go up 40, 50 trading days and have 4 days down. It's just not healthy at all. So I'm just going to point out a couple of really good indicators, and this is the bullish percent S&P. I've showed this to you before. Every time it crosses back and below, it really produces a pretty good signal. We did have one down and then one back up again, but I said let's always keep an eye on the separation from the 8, and we really didn't get any separation, so we came down for the first time, and now we're separated, right? We came down, we tried it, and then now we're still rolling lower. So this little area here, I like to see this take out the low, and then I could say we really have a true sell signal, okay? But watch, because this is based off a point and figure chart, very reliable, very, very reliable, okay? So keep an eye on that. Next, we're going to have one of the breadths that I like to look at, as you know, and that's going to be the where is it? If I can find it. that was off um, the advanced decline with volume. I do like to see that. And oh, here it is. Sorry about that. We did bounce a little bit, but as you can see, we're very, very low to the low side, excuse me, of this parallel or horizontal channel, if you will. So the breadth is really breaking down pretty hard here. And if you don't use the advanced decline without volume, you can see that it's the same. So keep an eye on certain indexes and little key areas because it really given us a good idea of what's really happening with the marketplace here. Bonds, same thing with bonds, and guys, and I really hate to sugarcoat things when things are not really happening. It's very, very quiet out there. So, when things start to move, start to change, obviously I will be putting this into the videos in the morning. But bonds are not breaking out or breaking down at the moment, but they're consolidating here, and they're consolidating above the 1272 extension, which I like to see the 140.26, and that's going to be really the key spot. And all you need is a little, flight to safety when it comes to some sort of an event risk, and bonds will explode higher in 2 or 3 days. You'll get to that. So just keep an eye on it. Bonds is also another area that I'm watching during the course of the trading day. Here's the ES. We're down 2.25 points today. Really not much of anything. It's still above the 20-day moving average. So uptrend still well intact. Longer term pitch is still well intact. But we need some consecutive down days, and we're not getting it. We'll have 1 day down, 1 day up, 1 day down, 3 days up, 2 days down. So this will be our third down day. Let's see if it's going to hold at 1965. That'll be really a critical area of support. If it breaks that, then look for that 50-day moving average to be the next target to the downside. IWM, what can you say? It's now officially have broken down from the bear flag. The next area is going to be the 200-day moving average. Remember that 61.8%, that golden ratio, it held a couple weeks back. So now it's approaching this again. Let's see if it holds. And if it breaks this time, 200, and then of course the pivotal low here at 107.50. And watch because any weakness you get, it's actually a good tradable index now because any weakness in the markets, the IWMs will break down even worse. So this is something that I'm going to be paying attention to for this week. Finally, the diamonds actually started to move lower, and that was partly due to Boeing. But again, started breaking down. It broke down below the 20 and broke down to 34. And we have this uptrend line, which now is literally, it broke below it but closed right on it. So this big bearish rising wedge is virtually on its way to actually trigger to the short side. But again, it only triggers to the short side when it closes outside of it. And I like to see maybe it down 1 or 2 days down, and then the back test. Back test is lower trend line. That'll get you confirmation that this market, the index is so weak that we just can't move higher here. So just keep an eye on that. And then of course the transports. Every time it hits these areas here, it sells off, and it started to doing so on Friday, as it did on Thursday. But again, bullish symmetry. Everything's still well intact. The 8, the 20, 34 to 50, and of course way down below 200. But that's my first downside target, this pivotal low right here, 143.04. And then lastly is the Qs. We had CMG, doing well. Some of the high beta names doing okay, but there really are a mixed bag here. And then now we're just hitting that 8. So it needs a lot of work to the downside. As you can see, all of the moving averages have bullish symmetry as well. And again, as a whole, this market is going to need a lot of work to break down, and it's going to need something really big to push the market lower with volume. Because aside from the IWM, you have one index out of the 5 which are diverging away from what the other 4 are doing. And it is a leader. It's one of our leaders, the transports being the primary leader. But you have to watch here because it can start to develop and get nasty where the markets do start to roll over. And the risk off happens extremely fast. So just pay attention to what's going on around you, right? All right, everybody, have a great day, and I hope everybody enjoy their weekend. We'll have another big update tomorrow morning. Thank you.